Hi, it's James here, and welcome to the FXX channel, your #1 trading resource. As always, we will be providing transparent and informative content without the BS. Today, we are going to be covering 5 must-know topics before jumping in and trading Forex. If you are new to Forex or you are considering jumping in, you have come to the right place, as we are going to cover what you need to know to start your Forex journey. Before we begin, a disclaimer for you. Forex trading does carry a high level of risk to your capital, and you should only trade with money you can afford to lose. Our videos are for educational purposes only and delivered by a team with verified results. So please like, comment, and subscribe if you enjoy the content. So, what exactly is Forex? According to Investorpedia's Beginner's Guide to Trading, simply put, Forex is the process of changing one currency to another. Forex trading allows a trader to buy and sell currencies on a decentralized exchange, betting on whether or not one currency is going to rise or fall against another currency. The trader chooses to buy a currency if you think it is about to get stronger, so you can sell it at a higher price point, leaving you in profit. Or you could choose to sell that currency if you think it is going to weaken, then closing your position once the price has dropped, securing the profit. That is the very basics of what Forex trading is. In the interest of keeping this video short, we will leave a link in the description in case you want to further explore what exactly Forex is, the history of it, and how it works. Oh, in fact, we do have a video for that. So, how do you know when to buy and when to sell? That brings us onto the second must-know, which is analysis. Traders use 2 main types of analysis when making their trading decisions. Those are technical analysis and fundamental analysis. So, what is technical analysis? Technical analysis is what most traders think of when they think of trading. This is the type of analysis that requires looking at charts, drawing up support and resistance areas, using trend lines, indicators, and things like that. This type of analysis has the trader looking at charts, searching for repeating patterns or behaviors that will allow a trader to make better decisions by helping them to predict where price is likely to go next. Technical analysis can take months or even years to practice and perfect. Some traders spend thousands of dollars taking courses on how to perfect technical analysis, though, to be honest, from what we have found, traders can generally find all the technical analysis training they need for free online. The best way to learn technical analysis that we have found is to get a basic understanding, then practice, practice, practice. All the education in the world won't substitute for the good old time on the charts practicing. Similar to a pro golfer, you can learn how to golf for 10 years in a classroom without ever swinging a club. But until you actually get on the greens and practice, you will never truly get a feel for it. Now, the second type of analysis is fundamental analysis. This focuses on the macroeconomic factors such as news events, political events, and factors that affect the overall strength of an economy. These are major news events such as unemployment rates and interest rate changes that can fundamentally change the key metrics of an economy that make investors confident or hesitant to invest in the strength of an economy, which has a direct impact on the strength of that country's currency. The reason fundamental analysis is important to pair with technical analysis is if your technical analysis is giving you a buy signal, and then a news report comes out that is bullish for your currency, that is like adding rocket fuel to your trade setup. Hello, sweet take profit being smashed and bagging those pips for profit. Alternatively, fundamental analysis can also save your backside from jumping into a bad trade at a bad time. Say all your technical analysis lines up for a great looking buy trade, but just as you're about to pull the trigger on that trade, the Qatari invade New York and things are looking bleak. The chances of your bet on the US dollar strengthening is probably not going to play out so well. That is why it is great to use sites such as MyFXbook and Forex Factory economic calendars to make sure you stay on top of the news events that are likely to impact your trading. Now, on to the third thing to know. This one is important. Forex is not a get-rich-quick scheme. Despite what many gurus and YouTube influencers will try and have you believe so they can sell you a course or a strategy or indicator, or they just want to run up those YouTube views, Forex will not be helping you turn $500 into $1 million anytime soon. While trading can become a full-time career and very lucrative career, providing you with financial freedom and the ability to be your own boss, you probably won't be buying a Lambo or yacht anytime soon unless you use grotesque risk management, jumping in with massive starting capital and gamble it all away, being more likely to lose it all than buy that car. Know how to identify incorrect trading advice and scams. For anyone trying to sell you trading magic beans, promising returns higher than 10% per month, or they claim to have a 100% win rate, no loss strategy, or anything that sounds too good to be true, always request to see verified results from over a year of trading data. This ties into our FX Acts tip for this video, and that is a very easy way to quickly sift through legit projects and likely scams, and that is to simply ask for a year of verified trade history that supports the claims of the person trying to promote anything trading related. Anyone who cannot provide at least 6 months to 1 year of trading history, verifying their claims using a site like MyFXBook or FXBlue, should raise some red flags, as the age-old common saying goes, if it seems too good to be true, it probably is. Now, onto the fourth thing you need to know, and that is to start off with a demo account. Remember guys, that trading is a career. There are trading professionals and that is how they make their living. Like any career and any professional, you need to practice. No surgeon starts off by operating on someone without years of education and practice. And nobody plays their very first sports game in the pro leagues without practice and preparation first. That would be a recipe for an absolute disaster. Use a demo to get some much needed practice time in. Demo trading is also referred to as paper trading. Use demo accounts to practice your technical analysis and navigate the trading platform. Demo trading acts as a simulation, allowing you to test your strategies and get a feel for how the markets move. Every new trader makes mistakes, and some of these can be of huge cost. I personally knew one trader who was practicing changing lot sizes on his new live account. He added a number 1 on the wrong side of the decimal and blew his account in a single 5-minute trade. This is one easy to make mistake among many easy mistakes you can make trading Forex. And the slightest mistakes can absolutely obliterate accounts. It is better to make mistakes like these and learn from them on demo accounts. That is for sure. The major downsides to demo trading is that there are no emotions involved here. So traders tend to stray from their strategies and make riskier plays than they would with real money, forming inconsistent and bad habits. Price feeds for demo accounts can also often be different to the live feed, with the data being inconsistent or slower to real market conditions. So this is also something to keep in mind, that demo trading will not always 100% mirror live trading. And the fifth and final thing to know is track your trades. Tracking your trades is a crucial thing that every serious Forex trader does, and there is no reason not to. Once you have an account on MyFXBook set up, you can set it up to track automatically your trades as it connects to your trading platform, and it analyzes everything for you. And best of all, it is free and hands-free. So, really, no reason not to have it, as it does all the hard trade tracking history, statistics, and analysis for you. MyFXBook gives you stats and info that you can use to improve and analyze your trading. This tool can help you identify your trading strengths and weaknesses and uncover bad trading habits that you may not have even known that you have. MyFXBook will also outline your winning percentage and your win-to-loss ratio, which is important in knowing to see if your strategy works, if you are comparing strategies, or if you need to make some tweaks to the way you trade. Your verified MyFXBook portfolio also acts as your trading resume or CV, should you ever want to apply to work as a trader for a prop firm or trading firm where you apply to trade with someone else's capital. MyFXBook is really the main reference traders will refer to when they are proving their worth and success as a trader. And that brings us to the end of this video, guys, for the 5 things you need to know before getting started in Forex. We'll include links in the description below for the MyFXBook and Forex Factory calendars, as well as an article that will give you a deeper dive into understanding what Forex is. Here at FX Acts, we are passionate about bringing you all the information, education, and content you need to help each of you reach your trading goals. Thank you for watching and stay tuned for our future content. If you have not already done so, feel free to check out our newsletter, Telegram, and Instagram, where we post daily Forex analysis. All the links can be found in the description below.